The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 65, NASDAQ off 22, S&P's off 8, gold contract flat at $15.13 an ounce. We have silver down 16 cents, $17.98 an ounce. Light sweet crude down 83 cents, $58.51 a barrel. Now, crude's below the lows of when it took off topside, which is just pretty amazing.
Okay, that first big bar
exactly,
day,
exactly.
Monday, I guess it would be early, yep.
Notes and bonds. You got the 10-year note down 11.6, 129.20, 30-year up 28. Both 10-year up 11 ticks, 129.20, 30-year up 28 ticks, 160.09. Now, they were a little sneaky yesterday, folks. They didn't have volume basically half through the day, and then guess what? Volume came in the note and bond market. That's saying that as the Fed comes out, notes and bonds want higher price once again, lower yield. King dollar up 86 ticks, trading 97.90. You got the euro at 110, the yen is at 108, and the pound is at 121 to 1 US dollar.
I'm just gonna throw this up.
Absolutely. And we get Fed Day.
We sure do. That's why we're getting a little bit of higher price in those contracts in terms of the 10-year and the 30-year, and that would be a little bit lower yield, right? I'm just gonna pull up the chart of that 10-year yield, because it's interesting in context to where we're going.
Yes. And the type of bounce that it had. It's huge.
Right?
Yeah.
And then we can get into the Fed Fund futures after that, because I was listening to your show last night. So pretty remarkable. Right now you're sitting at 1.76. We got to a high of 1.90, and that is Friday that we were up there. But man, oh man, I think it's 1.42. Yeah, 1.427.
Look at that, right?
So still, 35.35% above that low.
Right. Now, it's really cool here. Can you just put those crosshairs on that big bar? Yeah, that big bar right there.
Yes.
At the bottom of it. So that's 174.
Where are you thinking? That's 176 is the low of that
176.
bar?
So
Okay.
176 what? 40. Okay, that's what I was looking at. So that's 17. So that the big bar, folks, is 176.46, which was last Friday. Well, we're now at 176.65.
Yeah, we
so
did.
You're getting below it.
Yeah.
That's.
We did dip below it briefly. 176.13, the low of that.
So this is going to bring volatility into this marketplace. We didn't quite make it to ICE. ICE would have been like 1.99 to 2.
Okay.
Yeah, just up higher, exactly.
Up
you know what I mean?
Yeah.
It's where the breakdown was on August 1st.
Right here.
Right.
These lows kind of.
But that's, we get a lot of moving parts, no doubt, but it's the way this is setting up, it's setting up that we're going to get some really nice spikes out here at 2 o'clock.
So, 13% chance that we get a 50 basis point cut. 87% chance we get 25, 100% that a cut's coming either way.
And you're going to see that effective rate to the top right-hand corner, folks? That is not supposed to be over 2.25.
Nope.
This is going to be all about the repurchase agreements and the amount of cash that the banks needed overnight, and the Fed injected, I think, we'll pull it up. I think they
75 billion?
Yeah, this morning, right?
Yeah, I think so.
So we're 2.30, which is a lot better. It got to 10%. 10%. Could you imagine? You're giving me treasuries as collateral, and I'm saying, I don't care what kind of collateral you have, I need 10% for money overnight. That is not supposed to happen, folks, okay? Bottom line, it did, until the Fed came in.
That's the repo one, which is, I think, slightly different than that, right? Because repos are non-government entity. I mean, they're closely correlated. There's pressure on this, but...
the bottom line, that does not supposed to go over 2.25.
Yeah.
The federal Fed funds rate is the discount rate that the Fed has control over, supposedly. And guess what? Last few nights, they didn't have control over it until they put more cash in the system. Because what ended up happening, all the banks bought too many bonds. They didn't have any cash on their balance sheet. And bottom line, you're Amazon. You say, okay, well, I need more cash. And I said, oh, where am I going to get the cash now?
Sure.
Well, guess what? They had to go to the Fed to get the cash. Well, the Fed came to them to give them the cash. FedEx, we talk about the Fed. Holy cow. FedEx, you talk about taking a hit. And if you want to see something with FedEx here, you're down $22, folks. You're at 150. Now, FedEx is going to be one of the first ones I've been talking about, that high volume low from December for a long period of time, since December, actually, okay? Well, guess what? We're here. The high volume low in December was 154.66. Bottom line, FedEx went from 150, well, actually, the next, yeah, that's the lows of December was 150.94, made it all the way up to almost 200, $199.32. And now, guess what, folks? You are barreling into this, you're below it, and that's saying that FedEx now can get down into this next level, which is 119. So you break 147 and 119 is going to be game. Let's see what they had to say, man. I mean, that's a pretty big hit, man.
Yeah, they're talking about trade concerns. There you go.
Yeah. So let's see what we got here. We got blaming a weakened global economy. FedEx slices profit outlook at the latest sign. Trade tensions are dragging down corporate titans. The forecast signaled deepening trouble for the carrier. No doubt about that.
Yeah, and it just says, you know, Caterpillar, Deere, FedEx, which announced an employee buyout program in January even. It's going to pair its cargo jet fleet to contend with the diminished expectations. I mean, just harsh language, man.
Yeah, I know.
So the global economy continues to soften. We're taking steps to cut capacity, driven by increasing trade tensions and policy uncertainty.
Yeah, well,
and you know that's going to be an easy excuse for any CEO on a world stage like a company like that. And you have the next line down there saying that some analysts had said, you know, there may be problems here specific to FedEx as well.
Yes, and that's Amazon competition. You know,
exactly. Whether it's a slowdown or not, that's going to be an excuse.
Because UPS is only down $2. You know, that's pretty impressive when, you know, United Parcel is down $2, folks,
Definitely.
and FedEx is down $22.
Definitely. Can you put them on a longer term, too? I'm just curious, but they're definitely, no matter what.
That's pretty intense,
actually. It sure is. And they've gotten a pop at the open, it looks like, UPS.
Wow, what a different chart.
Yeah. That
is a different chart. They're almost at highs, folks, okay? They have a spike high up here back in January of 2018 at 135. The low of that is 119, and that's a decent looking shot, man.
This would be an important zone when it comes back up here.
Yeah.
Kind of like this high, this high, even counteracting, because it looks like, what is this, a monthly? Yeah, so it spiked up there, but finished the month at 127.32, but definitely a different company.
It's pretty wild, huh?
It sure is.
Let me see, who else is in that space? I mean, those are the two monsters, I believe, but let's see what this brings up. So we get FedEx, you get United Parcel. Yeah, they're the only ones we really notice,
Especially
right?
next one you go to Deutsche, I'm sure that's
Bank,
a European.
Yeah, that's the German post office, right? Yeah. Pretty wild, man.
Yeah.
Okay, so some of the higher volume equities, and what we had out here yesterday, folks, is that you had higher highs with lighter volume, and the prior day we had lows with light volume, and then it was amazing that it actually went up yesterday and had lower volume on the way up than it even went down. Oh, Chewy needs some more snacks. Oh, Adobe too, Adobe. So that was almost 3 for 3. Adobe come out with numbers last night, Chewy come out with numbers, FedEx come out with numbers, and they're all in the red.
Yeah. Let's check out Adobe. Let's see what,
Stay right there, folks. Tommy and I are going to be coming right back. We're going to be talking Adobe. Our phone number is 877-927-6648. Give us a call, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 39, Nasdaq's off 21, S&Ps are off 5.5. And if we go over to Adobe and we take a look at Adobe, it's pretty impressive. You know, Adobe's down $9.50, folks, and it's an ABC structure down to 275. But can you imagine running a public company? And you're just showing me these figures, Tom. Where do you see these growth figures and the market hits them? I mean, it's like pretty amazing, actually.
It sure is. So pull up the articles. So revenue is going to be about $2.97 billion in the period ending in November, the San Jose, California-based company said. Analysts projected 3.02. So revenue forecast for the current period fell short of estimates, signaling lower sales growth for its newer marketing products. Seems to be the theme here. And I'm just going to scroll down because, like you said, man, it's a pretty remarkable one. Here are some of the concrete numbers. And where were we? I think I might have been a little bit above there. All right, either way, we have profit, excluding some items, 235. No, go ahead.
Yeah, no, that's right. The stock gain. No, they had a sales jump, folks, from year to year of 24%. And, you know, listen, the market wanted more. But you can imagine growing something 24% when you're talking billions.
And here we are. So in the period ended August 30th, sales jumped 24% to $2.83 billion from a year earlier.
Right.
And the stock, you know, tanks. But guess what? If you told them you were going to grow at 30%, it's going to be priced in. So adjusted profit was $205 a share, and they had projected $197. So it doesn't seem like, I mean, it opened at, it was as low as $270. It's already $6 off the lows. Maybe the market kind of digesting that, hey, might not be as bad as you think. But like you said, being executive, grow 24%. When you're talking billions.
Yeah, public company, you either grow or die. It's a black and white deal, man.
Fast.
If we take a look at some of the other higher volume equities out here, you got Roku down $10, FedEx, the big one, down 23. You get Apple up $1.39. You get Chewy. Chewy's down $2 now. CHEW, I think. Let's see.
If you just back it up, it's gonna. Wasn't it there? No.
Yeah, there it is. Okay, CHWY. So, Chewy, folks. Okay. This is
dog food, right? Pet food.
Pet food. Order online. I used to use it all the time.
I heard you talking about last night.
Yeah, and then what ended up happening is that I feed my pets From, and
you got to share with everybody. I was watching and I was like, I don't know what From is. Nobody knows. I don't know what From is.
It's a high-end dog food that has basically no carbs.
Okay. We'll have to pull it up.
Yeah. So
I was just curious. I heard you talking about last night.
What had happened is that they were doing business with them for a long period of time. Then all of a sudden you got a letter saying, sorry, From's not allowing us to sell that product anymore.
Okay.
But it was a great service. I mean, I like the service.
Oh, I'm sure.
But bottom line is that,
everything.
You know, they lost losing a large customer like that. Not me, meaning From in general. Do you know what I mean?
And I imagine that's such a hard business to compete in. Like, why doesn't... You're basically competing for a slice of Amazon's business in a niche. Well, why can't Amazon just deliver the same dog food?
Yeah, well, there's no doubt. There's no doubt. So this went public at $22 June of last year. No, June of this year. Look at that. Okay, $22, you're at 28. And looks like you're breaking down out here today. And let's see what they did.
Yeah, and really, I was just gonna. That's the whole thing. It's at lows. It spiked higher on the IPO, and it's just been going down. We'll pull up the chart in a moment, but yeah.
Well, let's see. So, this is interesting. This is going to say they actually beat, but they wanted bigger. Chewy fell as some investors wanted to see a bigger sales beat and higher sales forecast. Oh, okay. This is interesting. Let's see. We know the sales, the stock's down, but what did they supposed to make? No, their gross margin was 100 basis points above estimates. That's 1%.
Yeah.
Yeah, there it is. They said that said Thrill, this is an analyst, I believe, is mindful operating losses in presence of larger scale competitors. And there's Amazon, Walmart, Target. There's so much money, man, in pet food, folks, in the pet business. It's amazing. It's so those big monsters are definitely going to be in that business.
It just becomes an issue of, level of scale that you have in terms of, and Amazon, Walmart, Target all have the scale, all have the delivery.
Yeah.
I don't know how you compete with them when you're just dealing with a niche of their products.
Yeah, it's just a middleman. That's all it is.
Yeah.
They don't make anything. Yeah. So look at this. Look at that number, though. Holy cow. They did $1.2 billion, folks, in 90 days.
Yeah.
Oh, man. That is some real bread. There's no doubt about that. That is pretty amazing.
I wonder what their margins are, and that's where I saw the word margins in that analyst estimate, though, because margins aren't going to be very wide when you're competing with Amazon, Walmart, and Target. No. They can't be wide because then you'll just get priced out.
Exactly.
Yeah.
King Doll. Let's go over well, actually, let's go to the bond market first. So we know that bonds are going to move.
Oh boy, I can't wait. 2 o'clock.
2 o'clock. Okay. So right now, what you have is this, and watch this. This was kind of I thought that when I was looking at this that. In the morning, it didn't look like bonds were going to get anything going at all. But we got an expansion of volume. Monday we did 1.6 million contracts. Yeah. Tuesday it did 1.7. That's an expansion. And we're going to have volume today. The real question is it going to hold price? It came back to its breakout area. It didn't get to the bottom of it, which on a 10-year, folks, is 127.21. Yeah. We got to 128.16.
And we're exactly right now 2 full points away from that low of 127.21. I only say it because it seemed like we were heading right back there if you go to Friday, right?
Totally.
So I think the 10-year yield's at like 1.76.
Oh, yeah.
It looked like you were going right back to 2 on the dot. So we're right in the middle.
No, there's the battle's going to be out here, man. I mean, there's going to be a cool little battle going on. There's no doubt about it.
And it's Wednesday. Crude oil.
Oh, this is fun.
We got a lot going on, man. Everything, right? Fed Day. You got a Gold Report webinar coming up tonight we'll talk about. But let's pull this up because it's 10:25. We're going to get that number 5 minutes from right now. And we're jumping into the spreads. I'm going to take a look at crude. I feel like this computer's still waking up this morning. All right. We're looking at the November contract, talk about some volatility. This will be interesting to see what kind of premiums they're going to price in this today with everything moving, right? So we'll start things off. Pull up this finder again. We'll look at these, and let's just see where we have our 11 a.m.s first. Again, the contract's at 58, so we're going to have a $58 one. We're only about 12 pennies away, right?
Yeah.
Contracts at 58.14. This is going to be our bullish ticket right here. It's $26. We're about 10 out of the money on the bullish side, and 58.25. That's tough. The computer's taking its sweet time this morning.
Gotta give some B12.
Yeah, so just for the 11 AMs, check that out. You're talking about $60. And you're
$60 away from 58.16.
58.25.
58.25. Okay, okay.
So that's a little pricey. If you
Yeah.
follow the program, $60, you need 60 cents, and you're capped out at $1.50. But guess what? The market's probably pricing in. You can get value on both of those. Remember, you let it spike one way,
Oh, yeah.
and then hold the other.
Stay right there, folks. Tommy and I are going to be coming right back with those oil numbers. Dow down 29, NASDAQ off 19, S&P's off 4.5. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil inventories rose 1.06 million barrels.
I think we were supposed to get a decline, was the estimate. Jumping back, a little bit of movement, nothing too crazy just yet. We are getting a little bit higher prices. We're trading at about 58.13 coming into that number. We're trading at 58.17. The market's still digesting that, I would say. 1.06 million barrels. And we, is gas? Yeah, gas rising 781,000 barrels. And we'll wait for that to load up, but a rise in oil inventories. Yeah, the expectation was for a decline of about 2.2 million barrels. We come in at a build of 1 million barrels. We'll see if the market reacts to that. I'd say there's more going on in the oil market than a 3 million barrel miss.
There's no doubt. And if we go take a look and we just put this, now this chart here, folks, will be delayed. But yeah, what I really wanted to look at is the aspect of how we're getting back into the gap that was established on Sunday night at 6 o'clock. So Sunday night, and we closed Friday inside the oil market at 54.85. You spiked all the way up to 63.38. It was actually 65, I think. That was when it was opened. And anyway, this is saying 63.38. Now, the low of that was 58.77, and you're at 58.36. That's saying that, number one, you're going to come right back down into it. This is, now, what was wild about this spike, by the way, too, is that it couldn't take out the swing point at 63.87. We went to 63.38, I think.
Okay.
Yeah, that's important to understand.
Sure.
You know, you should have been able to take out that little swing point. That's not even a major swing point. The major swing point is up at the highs at 65.59.
Yeah.
So, deviant markets, you just got to love them. I mean, it's pretty wild how markets like to move.
Yeah, and catching a little bit of a bid, 58.31. But again, in context, so we have a 1 million barrel build. There's expected 2. That's 3 million barrels. That Saudi attack put 5.7 million barrels off every single day.
Right.
And that's a weekly $3 million miss from the estimate.
Right.
So.
And then, you know what the Saudis had said is that they said that they're actually going to ramp it up to 9.2 million when it gets going.
Okay.
So that's, you know, I'm sure that they're saying, okay, we missed this, and now instead of doing the 7.2, it's, you know, 7.
We gotta catch up. Yeah.
We're gonna ramp the baby up.
They should have some demand that they can fill.
Yeah, there's no doubt. And, you know, the market is looking at that. This is going to get interesting. So we got gold moving here a little. Let's see what's happening here. And this is where you're going to get subtle moves, folks, before this Fed comes in. And this is one of them right here. So someone just came in this market, right? You're going to see just a little pop. I mean, $2 is nothing. But when you take the $2 and you just put, let's see, we're... time-wise, where are we at?
It's 33 past.
30, so this is a big one. So it's only 3 minutes into a 10-minute bar, and someone just came in 4,700 contracts, just took out that little swing point there with 41. So you get a small ABC up. So your 8 point on this, your B point is 15.14. I'm not going to take that spike down. I'll be more conservative. 15.08. So that's no big deal, but it's still $6. $6 on an intraday basis. Gets you, well, 15.17 right now. So 15.15. And the number to really keep your eye on is this 15.15 where it just got into. Because if we can get away from that, so that number there, 15.15, is the high of yesterday. And if you get away from it, then you can take, for a measurement, is you can take the high of that, you can take the low, and I still wouldn't take the spike low, okay? You take 15.15 and you take the low here, let's say, of 15.08.
Yep.
And that's $7. Then that gives you a price projection of 15.22. So you can expect we're going to see more of this. And with the Fed, you know, with this whole, there's so many, I mean, forget, when we were coming into this, right? We were coming into this, the Fed with trade wars, basically.
Yes. Right.
And that was kind of it. Do you know what I mean?
Yeah.
Now we get trade wars, you get an attack on the Saudi oil fields, and you have problems in the short-term money overnight.
Yeah.
So you get three legs here.
Chairman Powell will get some questions about that, I'm sure, on the press conference.
There's no doubt. There's no doubt. Yeah, big time. Let's go take a look at the king dog out here, Amazon. So Amazon, I guess, is coming out with digital music. They're upping their... let's see what they're saying here, because what's happening is that they are upping the deal in quite a way. That's what most of the articles are saying, that the digital music is going to be much better than everything that's out there right now. They're saying that it's going to sound like CDs, which CDs themselves are not like records, but evidently CDs are much better than what we're listening to right now.
Okay.
And it's a subscription-based service.
Okay.
You know, for you and I, which are, you know, members, it's 12 something. And then for other ones, it's like 14 something.
Okay. We'll have to pull it up. That sounds intriguing. I know the quality,
That's what they're going after. They're going after the quality. There's so much news on.
I know, right?
On Amazon.
King of the world.
Yeah. Okay, here it is. Oh, that's the CNBC article. But even so,
there we go.
Music HD. I'll see what they're having to say. And they say they're going to have 50 million songs. Music HD is supposed to sound better than Spotify, but it depends on how you listen. Interesting. That's what this article is stating anyway.
So they added 24-bit CD quality music to Amazon Music platform yesterday. It tested again against Spotify's web player, I see, which doesn't offer that sort of promise. Yeah, we'll see.
Yeah. It's pretty amazing that I still don't pay for music. But the other side of it is
to be fair, you do pay for music. You have Sirius.
Oh yeah, right.
Oh come on. See, my point is it slides so easily into lifestyle. You're paying for a radio, satellite radio.
Right.
And that's part of the reason. I pay for it as well.
Right.
And so, but if you didn't have that.
Yeah, I know. I should listen to it at home. See, I always listen to Pandora at home.
Yeah, you used to have to pay for online ability. You could pay for just your car.
Right.
Or then you could add it to online, your players, your home, your computer. And now actually, and I had always paid for that because I liked it, but now you pay for one price, you can use it everywhere.
Right.
Because I think they realized they were being foolish, cutting people out of the ability to use it at home.
Oh.
As in, you gain them as a lifelong customer.
There's no doubt. And you know, this is where I think some of the big media companies are losing it. And like the debates, bottom line, I don't even have a TV, okay? So what ends up happening is that I'm on my computer anyway, and most of the time, but I wanted to see the debate the other night, right? So I went on my phone, right?
Yes.
And I pulled it up, and you're trying to find the streaming, and the first couple I hit, which were the major networks, right? They wanted me to go sign up on something first. I said, oh, this is crazy. So then I realized that, hold it, I just got to go to YouTube.
Yep.
And that's what I did. I went to YouTube. I said, and bang, it comes right up.
Yeah.
So
certain things. The NFL, you're not going to be able to do it quickly. Now, jumping back and forth, though, the NFL Thursday night games, Amazon, you'll be able to watch the Thursday night games starting, I think, September 26th.
Interesting.
I happened to pull up Amazon yesterday. They have a big banner on the front page of their homepage saying Thursday night games. I remember when they made that deal. And I believe they're also going to be maybe played on the NFL Network. I'm not sure if that's an exclusive display, but nonetheless, Prime members included Thursday night NFL football. But that's where you're going to struggle to find maybe your home team.
Sure. Yeah. Yes. Yeah. 877-927-6648. We have the Dow down 37, Nasdaq off 19, S&P's up 4.5. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 44, Nasdaq's off 20, S&Ps are off 4.5. Let's go over to my man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlock.com. That's forex-trading-unlock.com. We're going over to Teddy. We want to get education on these currencies, and you talk about harmony in the marketplace, folks. For some reason, Teddy is on each and every Fed meeting, as well as like when Brexit is going wild.
That's right, man.
You gotta love it. Teddy Cakestad, what's happening, brother?
Well, we definitely have a Fed day, guys, today, and we know what that means. It means probably a lot of just staring at screens and nothing's going to happen until 1:15 Chicago time.
There's no doubt. The market wants to, basically sit there, see what the Fed's going to say. I was just saying to Tommy, if we just back down even a week ago, 2 weeks ago, the bottom line, you'd be looking at the Fed and the trade, war. Now we're looking at the trade war. We're looking at the oil fields getting attacked, and we're looking at a cash crunch in the repo market, which we haven't had for 10 years. So it's like, okay, where is this whole thing going to go? I mean, he's going to have to be really nimble, man, at this news conference.
Oh, absolutely, absolutely. Well, we also have, today we have the FOMC meeting in the U.S., but then tomorrow we also have the Swiss National Bank, and also we have the Bank of Japan that are also having their interest rate decisions.
Okay.
Here's what I think is going to happen. It's going to be a lot of absolutely nothing for the next 24 hours. Here's the reason being. We know that the market a few months ago had factored in a quarter point for sure and a half a point before the end of the year. So now we're coming into September. The question is, will the Fed cut? I don't think so. I think they're going to leave rates alone. I think they're going to see how the markets react, especially since we have oil on the move right now and a potential engagement.
Are you talking about they won't cut today or won't cut in October?
They won't. I mean, they won't cut today, and they're not going to cut in October. Probably.
Ooh, that's quite a call, man.
I know it.
Yeah. So
okay.
Here's my rationale: is they did the one cut, and it seems like it was almost like the world was saying, well, they did it because we wanted it. Well, I don't necessarily think that was the case, but they need to see how things are going to digest.
Okay.
The market's on highs right now. You have oil that's exploding because of the conflict. You mentioned also about the credit markets. So why would they touch interest rates? Why? It doesn't make any sense.
No, listen, folks, this is a good point. When we started the show, Ted, we were talking about that the effective rate last night, this is the bank rate, folks, that the Fed controls is 2.30. That is not supposed to go over 2.25. That's the reality. So it's like, okay, it's over it, but I'm going to cut anyway. So this is going to be wild. Okay.
Right. And then tomorrow we have two more central banks that are meeting that I don't think they're going to do anything either. I mean, the Bank of Japan, the likelihood of them cutting rates right now, I think is pretty slim to none. The Swiss also, I don't think they're going to cut rates either. I think they're going to leave things alone because you have a lot of numbers that are coming out in the ECB, the UK, and in the US, and in Canada, literally over the next 2 to 3 days. You know, these are like CPIs, PPIs, manufacturing, production numbers. If they jerk the market with interest rates, unless they already know what the numbers are and they're just going to do it ahead of time, which then we have to say, well, they were doing this ahead of time because they knew what the numbers were going to be. I mean, so I think that they're going to leave things alone. And look at what's going on with the dollar index right now. Dollar index has been flirting, constantly tries to be strong. But if you look at it right now, the major currencies like the pound have been in a rally for the past few weeks. Yes. And they even touched a higher move high yesterday. So now the U.S. dollar yen almost looks the same as the British pound U.S. dollar chart. But they're two different currencies against the dollar, and they're also in reverse. So that tells me that the dollar index right now, that even though like it got that rally on Monday because oil exploded, you know, that was overkill. Now, you guys have been in the markets for a very long time. I remember when Kuwait was invaded by Iraq.
Yeah.
Okay? Oil did not rally $10 in a day.
No.
It didn't. Now, it rallied, and it definitely rallied strong. We saw the markets move up and trend like they hadn't trended in a long time, you know. But for us, it was an over-exacerbated move. And if you looked at it like yesterday was turnaround Tuesday. It was kind of like, I looked at the way the currencies moved, the interest rates moved, the oil market moved on Monday and Tuesday. And I was looking at Monday night. I'm like, okay, so off of one, we don't even know for sure if it was Iran or calling, is it Yemen, blah, blah, blah. We haven't made a strike or announced a strike. Oil's moving so aggressively, it's got to be an algo run-up. You know what I mean? And then Tuesday we had the confirmation because today we had yesterday the pound made a higher move high against the dollar.
Yes.
How does that happen, right?
Listen, man, I think it's so intriguing, man. You talk about jerking the market around. If you're right in the context that the Fed doesn't go down a quarter point today, I mean, we might as well light these fireworks right now, folks. Okay.
Exactly. Well, that's what I'm looking for, guys. I'm looking
sure.
Totally.
That's what I'm looking for is the setup.
I love you, man. I can't wait. This is going to be really. We're gonna sell tickets to this one, folks.
Yeah. I mean, if you guys look at the dollar index, for instance, it just made a recent higher move high a few sessions back.
Yeah.
Then it had a big break. It bounced back on Monday, but then it reversed yesterday.
It did.
It made it. If in the short run, it made a lower move. It made a low. It made a lower move high, and now it's looking to make a lower move low. That tells me that if the Fed doesn't cut rates and the other central banks don't, the dollar is going to have a little bit of a sell-off, which means the pound will get an accelerated move to the upside. The euro probably is not going to do anything because it doesn't seem like the euro wants to do anything no matter what happens this whole year, right? You know, but then the yen, you'll probably see the yen drop, the U.S. dollar yen fall back also because if dollar weakness comes in, that bear trend may resume. So we may be at that inflection point, like you just said. This could be the spark that all of a sudden we're going to actually have a trend move going into October, and we are on the cusp of October.
Wow.
Right?
You know what that means? Got to gear up for a big sell-off somewhere.
No, you know what? I agree that the volatility, looking at this, you know, there's no doubt this is going to be volatile. You know, we commit to these all the time, folks, and, you know, most of the time you think that, hey, it's going to be volatile. Sometimes nothing happens. Sometimes, you know, you have it. But there's so many different variances here.
Yes.
You know, and I think one of the biggest ones is this problem with the, you know, liquidity crunch overnight. And I don't, it's hard to, I understand it fundamentally, but I don't understand it, like, what does that mean that the Fed has to do? The first place that I did go, though, I say, how can they go down on rates if the banks, not last night, the prior night, we're paying 10% overnight? It's like, hold it. You know what I mean?
Right.
If we're that bad, hey, listen, folks, you paid 10% overnight, but we're going to go down another quarter point. It's like, okay, you don't even have control over the rate overnight, which, you know, you do.
Sure.
So I can see a point, man. I can see a point. But I'll tell you, man, if you hit this, you know, number one, if you hit this, and I listen, God bless you. This is going out. This is going out everywhere anyway. You're going to be a freaking hero because I haven't heard anyone.
Well, I'll also have a good week and a half of trading. Also, if this happens,
well, we all will. That's the cool thing. There's no doubt. Volatility is a trader's best friend, folks. Well, Teddy, it's always a pleasure, man. You have a great week, a safe week, and of course, now this is really going to get intriguing. What do you think?
We'll see what happens by next week. Right?
Totally.
That's right, by 2 o'clock.
Yeah, 2
Thanks,
o'clock.
Teddy.
Thanks, guys. You have a good one.
You too.
Thank you. Stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom O'Brien will be hosting a special 60-minute live webinar Wednesday night for Gold Report subscribers titled The Next Leg Up in Gold is $1,794. Find out why. In this 60-minute webinar, Tom will be discussing how the bond market moves the gold market, where the gold demand trends are coming from, how gold outperforms fiat currencies over time, how gold trades an average of $110 billion a day in value, along with many more topics. Subscribers to the Gold Report just closed out 3 positions in the last week for profits of 28%, 35%, and 51%. Now is a great time to sign up for the Gold Report. You don't want to miss out on the next big run in gold and gold equities. Sign up now for the Gold Report by visiting the front page of TFNN.com and get ready for Wednesday's live webinar with Tom O'Brien. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow down 70, Nasdaq off 25, S&P's up 7.5. And as you come over to our website at TFNN, folks, we get a big day. We get Fed Day, and we get a big day in the gold market because I'm going to be doing a workshop for my subscribers at 5 p.m. tonight. Great day to do it, too, man.
That's right. I know.
No doubt.
You'll get some action. You'll be able to get some questions in there. I imagine it's not going to be a slow day for gold and for many markets, right? So 5 till 6, you're going to be in the subscribers. Next leg up in gold is $17.94. Find out why. Kind of what you're going to be talking about.
Totally. Right? And what we're going to have inside there, folks, is, we're going to be talking about how the bond market moves the gold market, where the demand is coming from in the gold market, how gold outperforms currencies over a long period of time. And then the last one's a big one, man. That, gold trades $110 billion a day. That's physical gold. Okay, you're talking about real bread. That's bigger than the Dow Industrial, smaller than the S&P, but bigger than the Dow. Oh, yeah, there it is right there. Pretty cool, right?
It is, man. And when you said originally this stat to me in terms of the S&P 500, I was saying, is that like the S&P futures you're talking about or something? It's like, no, it's all stocks of the S&P,
Right.
which is remarkable.
Right.
That value is just under, where the S&P ranks,
Right.
which is huge. And we're getting the biggest number of all treasuries. We get that news today, so that should move the market. Yeah, when you talk about a $550 billion a day market.
Half a trillion a day. Imagine that. Half a trillion a day.
It sure is.
And folks, it's real easy to come into. You can come over to our website at TFNN. You can get the gold report for a month, 6 months, or a year. They all come with a 30-day money-back guarantee. That gets you a month of the gold report, get you in the webinar. If you don't like the gold report at the end of the month, get your money back. Pretty easy.
And that will be archived, too, if you can't make it in there live.
Stay right there, folks. We got Think or Swim coming up next, and we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon, and Dave is going to be live on the air when the Fed comes up.
A few things to talk about.
Gotta love it. Thanks, pal.
Thanks, man.
Wow, look at him, folks.